So everything I do falls into two categories: risk framework and psychological framework. Everything we do as traders falls into one of those two things: risk framework and psychological framework. And on top of that, then I build, things like strategic elements, like how do we tactically get into certain trades? How do we stay out of certain trades? And I'm proud to report that some of my traders have month on month about 20% returns right now, coming from flat returns. There's one trader that I've worked with, who I think some of who has literally doubled his account every month for the last 2 months. And these are stats. These are people you can talk to if you'd like to work with me. I don't really advertise. I was just talking about this because Anthony wanted me to talk about this, knowing that there's quite a large group of really good traders in the current cohort. So feel free to get in touch with me if you are interested in, really dedicating yourself to the craft of being a professional, consistent level trader. So without further ado, you can contact me. I'll put my email in the Trading Live space, and I'm always happy to chat to anyone if they have any questions just about the markets. More than happy to do that. I always love talking to traders. Okay, let's get into this, because I know Mr. Reed is in the room. He is no stranger to a market. Vincent, Steve. Vincent is one of the traders that I'm working with at the moment. Vincent's been doing good. So, all right, let's look at these markets, right? Because I'm actually really scared. I don't know about anybody else, but I'm scared for some of my equities that I just hold on to and let them run. Why am I scared? Well, ladies and gentlemen, let me introduce you to the VIX. So if you don't know what the VIX is a volatility chart, index of the S&P 500, essentially for me, or the volatility in the CBOE, which basically is the main market in there, is this S&P 500, right? So what you're looking at here is the Thinkorswim platform. This is a platform I use for trading options, and for taking some equity trades. I mainly use Charles Schwab for my equity positions. But the point is, I just wanted to use this charting package to show you the VIX at the moment, because it's got the cleanest chart for me. At the bottom of the screen, you'll see stochastics. You've got a slow and a fast stochastic. The thing with a slow stochastic, which is a 60-10 periodicity, is that when this thing gets up above the sort of 75-80% line, it tends to really cause a ruckus, and especially if it stays up there and it stays entrenched, it's a scary place to be shorting any market. So the reason why I'm showing you the VIX today is because let's go into the recent couple of days actions, right? What we have here is, let me just make sure this stays on auto. What we have up here is daily bars. When we got this daily bar over here, we were at that point, we were actually having a day closing above this major downtrend. Now let me zoom out here, right? First, let's look at look at the 15-year monthly chart, right? So all-time highs on the VIX, 69.4, and that was really in October 2008 when we had the collapse of Lehman Brothers and Bear Stearns, the absolute nightmare markets. Then we have this high here, October 2011. I can't remember the macro picture at that time. But these are two key highs, and then we have this high here again, February 2018, to do with poor labor statistics. I remember trading that in the prop firm, and it was absolutely wild. But now here we are back around these levels. We're breaking two of these major downtrends. Now, what signaled the volatility that we were going to get, and I was talking about this in Trading Live at the time, you know, literally an hour before this happened, I was talking about this. And let's zoom in to the daily now, right? We're going to go down to the daily, right? What happened was that we zoom in here. It's hard to see, but we got this candle, all right? This candle was a day closing above the downtrend. That meant that we were now free and clear to take an excursion up to the next mother downtrend, which is the all-time downtrend, from all-time highs to second most all-time highs, right? We were now free to clear to hit that. Well, you know what? We did, and we got the biggest sell-off that we have seen since the crash of 1937 in the S&P, right? This is how it works. Right, this is how volatility works. On the your long VIX, that means you're short S&P. You're long S&P, it means you're short volatility. So this was clearly signaled. Your good old pal Timmy in Dublin signaled this on the day, and sure enough, we got it. We got that fantastic push for a couple of days there up into these higher volatilities. Now, what I'm trying to what I want to say and make clear again here is that we have now closed 4 days above 4 days above this mother downtrend, and we have a bullish engulfing pattern. So let me just put that back into context here. As we go back in time and look at these volatility levels, when we spike this high, we get the biggest sell-offs in this market. We now have a bullish engulfing pattern on the last downtrend to break above. And this is why I am forecasting that we are going to sell off in this market. We are going to sell off in US equities over the coming 5 trading days. What is my thesis for that? My thesis for that is that the macro picture will get worse, the coronavirus will deepen in the US, and we will have a weekend of European escalation of outbreak and US escalation of outbreak and South American escalation of outbreak. So these are very worrying statistics that we're going to be looking at, and we are also, with that, we also have to look at the S&P. Where is the S&P right now? Okay, so I am telling you here and now, mark it down, call your mom, tell her Tim said we are going to get higher volatility for the next 10 days at a minimum. Okay, so mark it down. I said it. Thursday the 5th, 11:44 a.m. All right. Where can this market go to? Let's zip back out to our 15 our all-time, we could say 15 years monthly. Where are we going to go to? Well, we're going to go up to 33.56 here. Let me just mark that up. Mark it up. Here we go. 33.35s, right? Next stop up, I see, well, we're coming up to really this all-time high, 46.30s. These are the caps. I see, I just don't, and then obviously we have the prior high here at 30.04s. Okay, that's right, Reed, call her, tell her Tim said. So, all right, let's look at the S&P, right? Let's look at the S&P. Where are we now in the S&P, right? Maximize sell. Okay, so what we're looking at in the S&P here is a weekly bar chart. All right, you can see. It's quite a clean chart here. Actually, it's quite nice. But please take note of this channel that I've drawn here, right? So essentially, this is what do we call this channel? This is called a linear regression channel. All right. Essentially, a linear regression channel is just a fancy word for a trend channel that slices the trend channel into 1, 2, 3, 4 sections. Right. Now let's look at this trend channel that's really started on the lows of 2018. Let me just activate this drawing and make sure we've already got the lows there. Perfect. All right, so let me zoom in here. Now we had this major sell-off that broke this trend channel to the downside in December 2017. Okay, but let's come back here and see if this trend channel really held again, and it did for me. I mean, for me, visually, this does hold water. It really does. All right. So let me just get this really tight. All right, that's it for me. Okay. So look at how this trend channel reacted. We're looking at weekly bars here. Now, what can we see here? We can see a failed bullish engulfing pattern against the downtrend of last week, and we can see that where was the high? Where was the high put in of the week so far? It's put in at the top of this trend channel. Okay, we can't get up here. What am I expecting? I'm expecting that if we get a close below on this week below 3034s, we are going down to 2800. We're going down to 2800. I'm pinning my colors to the door here. I am putting a sword out to fall on, but I am deeply short using options several US equities in the gambling space right now. Gambling space is, the thesis there is, what is the largest demographic of attendance of gaming casinos in North America? The demographic is Asian. We have a Chinese outbreak of flu, and where is there a biggest congregation of people? That is in casinos. So I don't think that, for example, Sands or MGM casinos are going to be able to give proper positive guidance on their shares for at least the next quarter under the existing threat of coronavirus. And I think when we have a weekend now of worsening situation, we are going to start to see these equities come off the table on Sunday night when we reopen, or Monday morning. Okay, so this is why I like long VIX, short ES right now, because I think this trend channel will hold. If we get a close, even of a day, let's jump in here, right, and look at the daily pattern. We'll take the pivots off. We can get in here and see the day. So far, we have printed up here, all right, yesterday, and we've come off down to 30.55. All right, so if we get any more downside, this will be a bearish engulfing pattern now of the retracement, and we are definitely going down to 29.50s. Right, so this is all the thesis playing out now. We are now long VIX, short ES. We have a rising VIX. Why would we ever be short ES, or sorry, long ES under that environment? Okay, so this is how we use confluence of different markets, and we piece together a story of a trade. Okay, so let's look at the hourly. Okay, do we see anything punchy on the hourly on these levels? Here's our level up here. Do we see anything spicy up here? I mean, sure, we're holding a bid coming into the top of this channel, but unless we start to see something spicy and put in a couple of hours above 31.27, for example, I really just don't like getting long this market. Even if we spike to here, I just don't like it. All right, so that's how we zoom in. And here's the bigger picture. All right, another trend we could put on is this low, spike low to current lows, and we extend that to the right, and let's see what we get. Right, so again, we haven't retouched on the downside here on this trend. All right, so let's move on. Any questions, feel free to pop them in the room there. And let's have a look at oil. This is a little quicker for me to use compared to my Sierra chart system. Okay, again, big fan of the big time frames. Reed, I hope you're looking at these big time frames on oil, because it is not looking good for senior WTI right now. So we got, as I talk about, we have a mother uptrend, which is in the bottom in green here, and we have a mother downtrend, which is in the red here, right? As you can see, the high of 147 back adjusted coming down to where we trade now. These are monthly bars, and if we have a real zoom in here, we can zoom in and see that we are now holding on this monthly bar below this trend. We've broken the trend on the downside, right? We've broken this interim trend on the downside. Let me make it green, make it a bit more obvious. It was red because we've broken it, right? But let me just clean up this chart a wee bit. Well, I can't actually. I have some key levels in here that I'm interested in, but the general pattern is what I want people to see. And as you can see, we've broken this uptrend on the monthly. I think if we revisit $50, I actually fancy us being short further down to break down to $41. Let's move into a bit of a palatable time frame here on the weekly, and as you can see on the weekly, we've just haven't been able to get back up to this trend to then sell down. Obviously, we now have the commitment of 1.5 mil cut, but we need the Russians to play ball, and if the Russians come out and say we're not down with that at all, boys, they say put it back to 1 million. Well, we're really in trouble. We're really in trouble, and Anthony certainly covered that today. Stochastics on the overall weekly picture are down. We are skewed down. Slow stochastic is moving down. Fast stochastic is oversold and should stay there with a descending slow stochastic. So, really, the levels for me in oil today. I'm going to actually jump on a little later and talk about what key levels I'm looking at, but. Certainly for me, 40. I think no, I'm not going to attempt it. I think it's 46.88 or 68. 46.80 or 68 is a nice short for me, and holding that. But I'm not prepared to hold any position until I hear from Russia. So that's really where I'm at. What else can we look at here? Well, I got up Amazon for a bit of a hoot to see what's going on here with Amazon. Really faring quite well under the circumstances. You can see that we got back down here. Let me use a much bigger time frame here on this one. You can see I've been holding these since 1650, which has been a bit of a testing hold, but I'm not day trading this by any means. So here's my kind of all-time chart on Amazon. So you can see this downtrend here has been breached to the upside, putting in a high 2185.95, and then a pullback to that uptrend and then go. So I mean, we've really had a beautiful pattern here. Warren Buffett will tell you that the book value on Amazon is, hold your hats, $3,500 a share. All right, so this is definitely one for the pension fund. Pretty pricey though, at we're currently trading at 1975.83 a share. I think there are cheaper and better things to be buying out there than Amazon right now. All right, I've taken up too much time as it is already, about 30 minutes. Any questions? Does anyone have a question they want to pop in the chat room right now? I'll put my email in there in case you would like to contact me regards the mentor program. That mentorship program will be starting the first week in April, and I'll only be taking on a very small number of recruits because we have a nice growing community on my Slack channel as it is right now, and we don't want to make it a huge amount of people in there at the moment. Any questions? Does anybody want to know anything about the VIX, the S&P? Great places to go for a pint in Dublin. No, everyone's good. All right. Well, listen, the best of luck today. You have been pre-warned. Volatility is still on the march. I mean, I really want to leave this chart on. Actually, I am gonna leave this on because this is going to be key to what we experience today. If we reject on the tops here, hold on, let me just pump this up again. So if we reject on the tops here, 30.04, okay, well, we're definitely getting volatility slacking off, and then ES will take a bid off of that. But if we breach these 30.04s, which you've seen are now amazing resistance on this daily chart, well, if we breach these to the upside, we're going to have a really bad day on the S&P. So just keep an eye on this. All right, we'll talk to you later. Thank you.